very low levels. Okay, I think we have Abhishek Somany now joining in, Managing Director of Somany Ceramics. He's going to talk about their second quarter results with us. So, Mr. Somany, thank you very much for your time, sir. Thanks for waiting, first of all. Prashant here. Could you categorize the quarter and how you see it in terms of the numbers that you put out, sir? Numbers look good.
So the quarter has been slightly better than the Q1, which we concluded in June. So we have a 10.8% growth in both value and volume. So that's been pretty heartening to see that the volume has kicked back again. There has been slight improvement in the retail sales since September. That's what we've noticed. So that has led to this particular growth. Coupled with the new glazed vitrified plant which we had started, of which only the June sale kicked in last quarter. This quarter, the plant was stabilized and we were using pretty much 75 to 80% of that capacity. So that would keep continuing to improve over the next few quarters until it comes to 100% capacity. So that also led to the volume growth and contributed in also the bottom line.
Abhishek, hi, afternoon. Could you tell us what the exact volume growth was in Q2 and what are you forecasting for the rest of the year by way of volumes?
So it was 10.8% was the volume growth in Q2, and if we take as H1, it was about 8.1% was the growth in 8.6%. 8.6% was the volume growth as far as H1 was concerned. And going forward, I think Q3 would be similar. Q4, we are a little tentative because GST would be kicking in 1st of April. Therefore, we're not too sure as to what the rate would be and how the dealers would react in taking in stocks. But that's going to be purely, a situation where the March sales, if at all that happens, would probably be slightly lower and then it would pick up in April. So I think I'm a little uncertain about that. I would be able to comment a little more with surety maybe after the Q3 results.
Could you talk to us a little bit about the full year number as you see it, sir? What would that, in your assessment, come in at?
So like I said, if the GST kicks in, then the full year number we're looking at similar, about 7 to 8% growth. If the GST gets postponed for any reason from April to a little later, we would probably be able to better the growth because then in that case the March sales would be much better than what it would be if GST had to kick in.
Okay. On your margins, you've expanded your margins by nearly 210 basis points on a year-on-year basis, 8.7%. What led to that? And margin sustainable around this 8.5–9% mark?
That's right. Margins will only get better. It is sustainable at this level. It is purely led by the glazed vitrified tile which has kicked in, and also our continuous efforts to sell more of the value-added tiles, and also a continuous effort to sell more of the vitrified tiles as a segment. Coupled with that, we've also done fairly well in the sanitary ware and faucet segment. We've had a reasonable growth in the sanitary ware and faucet segment, approximately 36% growth in both these put together. So that also has led to better margins. Like you know, the sanitary ware and fittings segment has a slightly better margin than tiles as it is in steady state.
In a way, if you step back, I mean, would you say, growth has essentially bottomed out? Revenue growth with or without GST has bottomed out? And if you could talk a little bit about how much would you have to spend on advertising, for example, given challenges in competition, etc. Yeah, go on.
Sure. So advertising is generally a benchmark in this industry is about 3% of revenue. We have stepped that up a little bit. We're about 3.2, 3.3% of revenue this quarter, but that would even out to approximately 3% at the year end. And yes, you can say that, the volume and value both to an extent have bottomed out here, where we are seeing improvement in retail. Apart from retail, we're also looking at the government spending on infrastructure. So if you see steel and cement, which has started picking up in terms of price, steel and cement has started going up, the consumption is going up, which is a great sign for us because generally when steel cement goes up, between 12 to 15 months is a lag for tiles. We're the last in the building material as far as finishing is concerned. So therefore, it is only better times for us going forward. So you could be right in saying that that we've bottomed out here and we'll only get better from here.
All the best, Abhishek, for the future, and thanks so much for joining in. We'll get into a very short break, but more on earnings when we return. Stay tuned.